In 2014, Goldman Sachs reportedly held $22.5 billion in earnings offshore, potentially deferring U.S. taxes under then-current laws. This is one example of how corporations and wealthy individuals use tax havens to reduce their tax bills, legally, though controversially. So, what are tax havens, and how do people take advantage of them? A tax haven is a country or territory with very low or zero corporate tax rates, strict financial secrecy, and regulatory systems that make it easy to set up companies or trusts. The Cayman Islands, for example, have a 0% corporate tax rate, compared to 21% in the U.S. Corporations take advantage of tax havens by setting up offshore subsidiaries there. These subsidiaries often hold intellectual property, financial assets, or trademarks. Then they charge the parent company royalties or licensing fees for using those assets, shifting profits from high-tax countries to low-tax ones. Let's say I own a U.S.-based financial firm. If I create a subsidiary in the Bahamas and assign it a proprietary trading algorithm, my U.S. firm can pay royalties to the Bahamas-based subsidiary. This reduces profits in the U.S., where they're taxed, and moves them to the Bahamas, where they're not. This strategy, called profit shifting, is used by many multinationals. Another method is through intercompany loans. A subsidiary in a tax haven can lend money to the parent company. The parent pays interest on that loan, which is tax-deductible, reducing taxable income. However, tax authorities now scrutinize these transactions to ensure they reflect market interest rates and aren't just used to dodge taxes. But what about individuals? Wealthy individuals may use tax havens by setting up offshore trusts. A person might create a trust in a low-tax jurisdiction like the Bahamas, appoint a trustee there, and remain the beneficiary. While the trust legally owns the assets, the person may still benefit from them. For example, if I transfer $5 million in investments into a Bahamian trust, the earnings may not be taxed locally. The trust could even lend me money at a low interest rate. But this is legally tricky. Tax authorities in many countries require disclosure of foreign trusts, and misuse can lead to heavy penalties.